And we're going to begin with the euro versus the USD and then go through the list. We had some very interesting price action as well, as you've probably already seen in crude oil prices. Very sharp gain there on the back of exemptions that were on certain importers. So Iranian crude oil, those will be coming to an end, and that is causing crude oils to gain. So we're going to talk a bit about that as well. But let's begin with the euro versus the USD, where there's not a lot of activity happening. As you might remember, on the 18th, the market declined a bit, and it could potentially go a little bit higher, I think, but it's very difficult for me to say if we're going to be up or down here on this market, given the way it's just trading sideways. I am, however, looking at a break to 111.75. Sorry for sounding like a broken record, but yeah, that's really what I'm looking for. What is also interesting here is the GBP versus the USD. So I've been insisting to be bullish above the March 10th low, but we also need to start to sort of understand that we might actually not trade upwards. We might actually just trade lower. And if you look at just the section here, you have actually, if you look at 6 hours, it's even clearer. But you have what we call an ascending triangle. It's an ascending triangle because you have nice horizontal support, which is the March 10th low. You have one low here, another one here, and then you have another one here, and then you have these ones here. So you have 1, 2, 3, 4 levels pretty much at the same level. And if we trade below 129.50, then that ascending triangle would be triggered. That would be bearish like this, and we could potentially see a decline not only down to the February 14th low, but most likely lower. Now I'm not going to show you here, but check out New Zealand dollar versus the USD. We did look at that in a video that we did on our YouTube channel, and on that YouTube channel we mentioned that a break to some of the lows would probably lead to lower prices, and we're clearly seeing this in the New Zealand dollar versus the USD. So it's looking like New Zealand dollar is already bearish. Dollar yen, we're going to look at that in a minute. If they have that breakout, could see further dollar strength. And then you have GBPUSD, which is very close to trading much lower on a break to 29.50. So it looks to me that we're on the brink of seeing some more dollar strength. And gold prices, which we also covered here, we already have that already. As well, I forgot to mention, guys, if you're watching this on Twitter, don't forget to like the video and retweet. Let's get this morning update trending on Twitter. As well, if you're on YouTube watching it directly, don't forget to hit that like button, and don't forget to subscribe to the videos, because I do update this video most of the days when the markets are open, and then I also do another set of videos in the afternoon, which we call front row, and that's where I talked about New Zealand dollar versus the USD. I think I published that on Thursday last week. Now, let's move along here. So this is the dollar versus the Japanese yen. And the dollar versus the Japanese yen, triggered this head and shoulders here on the 12th of April. But we haven't had a lot of action since then. And we need to be careful, because I think by the end of this week, the Japanese banks and public are going to have, I think it's like a long week with just people not working. And I think it's a long public holiday, really. And that tends to put a lot of these banks offline, which means that there's going to be less liquidity in the dollar versus the Japanese yen. But that as well can create some bigger moves. Of course, you just need to make sure you don't trade too aggressively if we have some sort of a flash crash. Now, here for this market, the trend remains bullish without a doubt, and I think we could go down maybe to 111.45, and then maybe from these levels, I think people are going to start to get involved in buying. Myself, though, I would like to have a break to 112.15, take this level out, and I think we can go upwards. As for gold prices, it's looking all right. So you might remember I showed you this setup, and you can clearly see some dollar strength here. So I was waiting for this for quite some time, and it was the break here on April 16th that happened. The market moved a bit into, in my case, I'm a bit in profit, and the risk reward ratio here, because of this massive head and shoulders pattern, is 5.41, which is a very good risk reward ratio. Now the market has not really traded much lower. It did attempt to challenge last week's low earlier today, and that might come a little bit later on today. I think another retest of that. For now, from a sort of scalping short-term perspective, as long as you trade below the April 22nd low, I will remain bearish. But looking at it from a bigger perspective, as long as you trade below 1288, I still think we can go to the downside. And on a break to last week's low at about 1270 on this chart, I think at that point I'll be able to take my trend defining level and put it up here, which is just above the high from April 17th. As for crude oil prices, look at that. You remember this? We talked about this here, and we said that we're looking at a big head and shoulders with a head here on December 24th low, left shoulder, and then a right shoulder over here. And I said as long as we on the break here we can go upwards. Well, look at that. We're almost up with 21.76% and about to hit that target. Reminds me a lot about the French stock market, where we also had massive head and shoulders, and we are about to actually we already hit that target a long time ago, really. We had this head and shoulders here. You can see that on a 6-hour down here. This was one I highlighted. I think it was like that, and actually it was like that. Pushed to the upside, moved substantially upwards. Now we're up at these highs. There's a lot of people that really are we're like this, you know, like the horses. They have, I don't know what they call it in English, but you know, they have these things for their eyes like this, so you can only just focus in one direction. There's a lot of people that got stuck when we're trading down here, looking at the rear mirror. And I will admit, I was also looking initially at the rear mirror because I was actually bearish from the break here for this move to the downside. So obviously, if you're bearish and you're actually right in your prediction, you're a little bit like this. But then on the way back to the upside, we start to see all these head and shoulders here, and also in the German DAX and crude oil prices. And then at that time, if you're a responsible investor and trader, you know, you sort of need to start to widen your, so you look and not just look at what happened with the data recently, because if you do that, you wouldn't be part of any of this move. So anyway, crude oil prices very close to reaching that high as $11.95 move, or 21.76%, which is a very strong move. And very close to trading to these levels. I was long myself something called gas oil, and as the market opened yesterday, it even opened above my take profit level. So I got filled for a nice decent profit. Now looking at this today, I might be very tempted to look to get involved. Now the reason what's happening here is that as you might remember, the US left the agreement with Iran, the nuclear deal agreement, where and what happened is that they put on sanctions. So people that buy crude oil from Iran, it's going to be limited or not be allowed to trade with the US. So obviously a very strong argument for most people not to trade with Iran. Now, to make it easier for like a transition period, they put on exemptions, and I think it was about 6 countries that were dealing with Iran. And what happened here is that those exemptions about to end, if not already ended, I think. That is causing the price to gap the way it is. OPEC would probably even try to produce more crude oil, I would guess, to meet this supply that would be gone, I would guess. But we're not seeing that right now. As for this, you know, it might be very tempting to buy up here, but you know, the opportunities to buy were at lower levels, and there is still opportunities to buy here. But we had this gap, price closed here. Let me actually see exactly if we just load a 30-minute. So there was some nice, actually, let me see here. Well, it's not really obvious here. I guess this one did not gap as much, but the key point is this. I think we are gonna test this breakup point and probably go down maybe to something like 64.77 at one point. So I do think we can go down and then probably upwards, and it's from these levels down here that I would like to buy if possible. As for the S&P 500, the trend remains bullish. We talked about buying at these levels, and so far it's looking good. Anyone that bought at these dips on a little bit of profit now. It could be very tempting to reduce the stop loss levels, but it's not the time yet. I think we do need to trade above the high. At that point, we can put a stop loss here. What's also interesting is that the Nasdaq 100 futures set new at 2018 high. Tell that to the bears. I think they're still sort of wondering, what's going on, and I'm not really sure what's going on here. I mean, I'm not sure what they're up to, but sort of my first initial reaction is that I haven't seen nothing really about the futures being up at a new 2018 high. Obviously, I haven't really looked at too much overall, but nothing in sort of mainstream media so far. And this is good because the fact that we're at these levels and there's not too much about it just tells me that most people, again, don't understand or believe why the markets are up here. And that tells me that we could potentially see further gains, because it's when we reach these highs and everybody's sort of patting themselves on the back and telling you I told you so that things start to change. But it's not like that, at least so far what I see. So from that perspective, probably higher prices. And as for the German DAX, going nicely towards that head and shoulders target. The target is up here at 11.26, and we had the breakout here. So if you would close the position right now, I think you would have a risk-reward ratio position of 3 times the money, which is not bad. If we reach that target, you get that 4.9 times risk-reward ratio, which is really good. I think here, as you can see, the new trend defining level was down here, and it's now here. And I think, we could have, I just took a fib. I need to adjust it already, like that, from the low to the high. I think we might sort of go down to the first fib, worst case, maybe a little bit lower. But I think as long as we're above these levels here, we should be fine. And now my trend defining level is just below it here. I don't want to be too close to all the action. I think let it go down. And then if it goes upwards again, I think we could take trend defining level, just put it here, and then here. Now, there's nothing wrong with taking partial profits, like a quarter of the position or half of the position, and then looking to buy a bit more on the dip, or just keeping that and sort of see how far it can go. And I think that's pretty much it. I think we covered pretty much all the markets that we covered here at the ATFX morning brief. As I was saying before, if you're looking at this at Twitter, don't forget to like and retweet. Let's get this presentation trending as well on the YouTube channel. Please don't forget to like and subscribe. Now, I still have the issue that I can't actually see your comments. It appears to be that there's some restrictions with the browser I'm using. So I'm gonna see if I can load it on my mobile phone. If there are any questions, I should actually be able to pick this up as well from here. Let me check. I'm gonna load it on my mobile anyway. Yeah, so this is not the easiest thing. Here we go. Okay, good. Ronnie says blinkers. What ray sources used to deter distraction? Blinders. Yeah, blinders. Blinkers. All right, this is interesting. So Ronnie says blinkers, and Mark says blinders. We're talking, of course, about the horses to deter distraction. Thank you so much for your help, gentlemen. I hope you guys having a good day. Ronnie, based in Scotland, if I remember correctly, and Mark McDowell, based in the United States. It's good to see you guys here. I'm on my mobile right now to see any comments or questions. If you have any questions, guys, don't forget to put them in the chat. No, blinkers. Okay, blinkers, okay. I'm let's do a Google search on that. Blinkers or blinders? Yeah, maybe American versus Scottish or English. Okay, I think we're gonna wrap things up. Guys, thanks so much for watching. Again, don't forget to like that video. Don't forget to subscribe. Help to get this show trending. Have a good day, guys, and I'll see you guys tomorrow. And of course, I'll probably produce some more content for you. So just stay tuned on my Twitter as well. Thanks so much for watching, and I'll see you guys tomorrow same time. Bye bye.